Hello and welcome back to my channel. In this video, I will talk about credit sales and purchases transactions and a quick introduction to the books of prime entry. In my previous videos, my examples are cash, sales, and purchases transactions. In this video and the later videos, we will focus more on credit transactions. So our examples this time will be credit transactions with VAT. We will also take a look at the business documents for credit transactions and recording them to Daybooks. First, let's take a look at the flow of credit sales transactions and the business documents involved in it. Remember, in credit sales transactions, our company is the seller. First, the company will receive purchase order from the customer. Then, after confirming the order, the company will send the goods plus delivery note to the customer. The customer will sign the seller's copy of delivery note confirming the receipt of goods. And the seller here is the company. Then, from the details in the delivery note, the company will create a sales invoice and send it to the customer. If there are some defective goods, the customer will return them to the seller, so the company will receive those returned defective goods. The company will then create a credit note and send it to the customer containing the details of the defective goods as agreed by both parties. After a period, for example, after a month, the company will send a statement of account to the customer. The customer will then pay the company, so the company will receive the payment plus remittance advice. You may not encounter all of these documents in the assessment. However, it is important to know what are these documents for. And remember, we are always looking at the company's point of view. Next, let's take a look at the flow of credit purchases transactions and the business documents involved in it. Here, it's the opposite of credit sales transactions because the company here is the buyer. First, the company will send a purchase order to the supplier. After confirming the order, the goods will be sent, so the company will receive goods plus delivery note from the supplier. The company who is the buyer will sign the seller's copy of delivery note confirming the receipt of goods. Then the company will receive an invoice from the supplier. If there are some defective goods, the company will return those defective goods to the supplier. Then the company will receive a credit note containing the details of defective goods as agreed by both parties. After a period, for example, after a month, the company will receive a statement of account from the supplier. The company will then send the payments plus remittance advice to the supplier. Now we are going to prepare a sales invoice, getting the details from the delivery note. So for example, our company, ABC Limited, made a credit sale and delivered the goods to the customer. So this is the example of delivery note signed by the customer. In preparing a sales invoice, we have to check all the details in the delivery note, also other details, which is the VAT and the trade discount. The VAT rate is most of the time 20%. However, if you are not sure, don't worry because the VAT rate is always indicated. The company also offers a trade discount, which is 10%, so this will also be included in our sales invoice. Remember, the amount of trade and bulk discounts are already determined, so we could include them in the sales invoice. However, the prompt payment discount amount will only be determined upon payment if the customer decides to take advantage of that discount. Now let's calculate the amount to be included to our sales invoice. The first one is total amount before discount. It means the total amount before deducting any discount. Let's check our delivery note. We have 80 units of product A at 25 per unit. So 80 units times 25 pounds. $2,000 is our total amount before discount. Next is the trade discount at 10%. So let's get the 10% of 2,000. So 2,000 times 10% or 0.10 equals 200. 200 is our trade discount. Next is the net amount after discount. This is the total amount after deducting the trade discount. So it's 2,000 minus 200 equals 18. 18 is our net amount after discount. Next is the VAT. Our rate is 20%. Remember, the VAT is always based on the net amount after deducting the trade and bulk discount. So our net amount is 18 times 20% or 0.20. Our VAT is 360. Next is the total. It's our net amount plus the VAT. It's 18 plus 360 equals 2,160. And this is our total or gross amount of the invoice. So now this is the example of the invoice containing all the amounts that we have just calculated. Next, we are going to record our sales invoice to our Daybooks. But before that, let me just give you a quick introduction to Daybooks. We have 10 types of books of prime entry, or also known as Daybooks. These are the records where we enter the details of the business documents that we have created or received for our business transactions. First is the sales daybook. This is where we record all the sales invoices for our credit sales transactions. Next is the sales returns daybook. This is where we record all the credit notes that we have issued to the customers for the return of goods. Next is the discounts allowed daybook. This is where we record all the details of the prompt payment discounts that we have allowed to our credit customers. Always remember that we only record the prompt payment discounts in this daybook and not the bulk and trade discounts. Next is purchases daybook. This is where we record all our purchases invoice for our credit purchases transactions. Next is purchases returns daybook. This is where we record all the credit notes that we have received from our suppliers when we return goods. Next is the discounts received daybook. This is where we record all the details of the prompt payment discount that we have received from our credit suppliers. Next is the cash receipts book. This is where we record all the cash receipts from either cash sales or payment from credit sales. Next is the cash payment book. This is where we record all the cash payments that we have made, either from cash purchases or payments for our credit purchases. Most of the time, the cash receipt book and the cash payment book are both in one book, which is the cash book. If that's the case, the cash book has two sides, the receipt side and the payment side. Next is the petty cash book. This is where we record all the small cash purchases. And the last one is the journal. This is where we record all the entries that cannot be recorded in the other daybooks. All the 9 daybooks from sales daybook to the petty cash book will be included in Introduction to Bookkeeping. The journal will be included on the next unit, which is the Principles of Bookkeeping Controls. Now going back to our sales invoice, we are now going to record it to our sales daybook. Before that, please always remember that for our net column, we will always get the net amount after discount. We don't record the details of our trade and bulk discounts in Sales Daybook. Let's enter the date of the invoice, the customer name, customer code. This is a unique code that the company assigns for each customer. Then the invoice number, then the total amount, which is the sum of the net amount plus VAT. Then the VAT amount and the net amount. Next, we are going to record the purchase invoice to our Purchases Daybook. Our supplier XYZ Limited have sent this purchase invoice for our credit purchases transaction. The company also assigns a unique supplier code for each supplier. And again, always remember that for our net column, we record the net amount after the trade and bulk discount. First, let's enter the date of the invoice, the supplier name, which is XYZ Limited, the supplier code that we have assigned to our supplier, the invoice number, the total or the gross amount of our invoice, the VAT, and the net amount. That's it for this video. I hope you find it useful. If you want to watch more videos like this, please give us a thumbs up and subscribe to our channel. Thank you for watching.